Good morning, folks. Hope you're well. Might even be afternoon now. Dr. O checking in, just picking up on some questions that have come in. Actually, property related. I sort of balled them together. Actually, I could have taken each one of these and done a separate video on each one, but actually, it seems more appropriate to tackle them all together in one video. Do you like my background, by the way? Can you guess what the subject is of this particular video? Yep, property investing. And I'm sure many of you know, if you've followed me or been around me for a while, you might have even come to these Facebook messages, lives, etc., as a result of maybe following me through property investing. I've been buying property since I was 35 and 55 next month, so coming up to 20 years. Bought my first one in Oxford, and then we expanded the portfolio up and down the UK. And it's been an interesting journey. I've had some ups, some downs, and I've been fortunate enough to teach this for many years now, both in the United Kingdom and internationally. So continue to do that, and we get a lot of questions. I think the most common question at the moment is, in fact, I had this conversation with somebody today. One of the parents is, what do I think about property investing in the UK at the moment? Is this a good time to be getting into real estate? So look, there's a lot of hype around real estate investing, and there has been for many, many years. There seems to be more and more people cropping up around the UK teaching it and saying that they can teach you how to get into property, etc. So you're going to be bombarded with that kind of information. I think that's just part of how the world has evolved over these last 12, 18, 24 months, 4 or 5 years or more, but certainly more recent times with social media being so prevalent. So you're going to hear lots of different stories and different messages. The key thing I want to get across to you, and I've put this on the screen, is this is a business that takes work. So I want to answer the questions in reverse. One of them was, is it a get rich quick scheme? So I got asked just in literally in the last few days these questions. What is property a good time to get in now? What are the best strategies in the United Kingdom? What about COVID? Is it a get rich quick scheme? Okay, let's do it in reverse. Number one, it's not a get rich quick scheme. If anyone ever tells you that, I'm sorry, but it's bullshit. They might not use that language. They might tell you, oh, you can be rich in the next 6, 12 months, whatever. But the reality is it takes time. It takes time to build a business. It takes effort. It takes hours of doing research, picking up the phone and speaking to the right people in your team. It takes setbacks. It takes some deals that aren't going to go as well as others. It's going to take people saying no to you a lot, you're going to find, and that's just part of the business. And my business is very different to how it was when I started. I'm much less hands-on than I was when I started my property business. So you're watching this and you're thinking COVID's really tough and I'm not sure about my future, maybe I need to change direction. I know I'll go and trade the stock market. Oh, that's also tough. It takes work and effort. I'll go and start an internet business. Yeah, well, good luck with that. Again, it takes work and effort, and everyone thinks it's going to happen overnight because a lot of people promote that. Oh, I'm going to go and start a property portfolio and be rich in a year. Okay, well, that's another challenge that people face. It doesn't take a year to get rich, or 6 months to get rich, or 2 years to get rich. That's not really the phrase that I tend to use. We talk about security, putting in place an income that provides you with, if it doesn't replace your own salary, at least gives you some choices. It gives you some security. So it's not a get rich quick scheme. Now, if you compare it to 40 years in a job, then it is a hell of a lot quicker. So if you can do it in 2, 3 years to get to a point where maybe you've got an income of 2,000, 3,000, 4,000 pounds a month coming in, depending on how much effort you put in, how much work you put in, how much money you're prepared to put in or raise creatively, using angel investors, etc. There's so many different ways you can approach this, and it's one of the things that we teach. But the reality is you're going to have to be disciplined. Don't assume just because it looks shiny on the outside, it's going to be always shiny. It's not. And this is a pretty straight message, which I say the same thing when I'm teaching people. It's a great business. However, you've got to put the work in. But compared to what? 40 years in a job, being answerable to somebody else, having to get up and put a certain number of hours in to be paid for that every single year. And if you stop that at the end of a year, the income doesn't come in. Whereas with real estate, you can stop the buying process on a property. You still have to look after it, but the managing agent can do that for you, which then comes down to you just keeping an eye on it over a period of time. Every now and again, it produces an income for life. I think that's the key message for anybody. Once, if it's producing 300, 500, 700, £1,000 a month, whatever the property is, Yes, that will fluctuate, and yes, you're going to have a changeover of tenants, etc. But over time, you've got that consistency of income. So that's my first message. It's going to take time and it's going to take effort. So no, it's not a get rich quick scheme to answer that question. Um, so that's the first 2 points I wanted to make here. I'm just looking at my slide to make sure my screen, just to make sure I've got the right message. So I wrote down here as an answer, let income lead your wealth. So what does that mean? So I think a lot of people, I'm talking to internationals at the moment, and a lot of them have this perception that by buying properties, they're going to be instantly wealthy. It's not quite that way. Now, look, you can buy a property heavily discounted and potentially add 50, 80, £100,000 depending on the size of the deal. And without a doubt, you can create an element of wealth in there. If you do that on one deal, well done. You might make 40 or 50,000 pounds of profit. I'm talking in pounds sterling whilst I'm recording this here. But that doesn't necessarily mean that you've created that level of wealth yet. That comes over time. And if you allow your portfolio to grow and buy the properties below market value, you're getting what I call a double whammy. You're getting the equity up front and the equity growth in the future. The benefit to the equity up front is if the market goes flat for 2 or 3, 4 years, which we may see a situation certainly next year, with the recession that's biting and COVID, we might see the market correct a little bit. It might take a little bit to stabilize and then go back up again. So by buying now at a discount, you're building in some fat and then allowing more fat to add when the property portfolio grows in the future. So that's a longer term plan. I bought a property for £269,000 back in 2004. Yeah, it's 2004. We just split the title on it a few years ago, and it valued up at over 500 and something thousand pounds. So you've got 200 plus K's worth of equity growth, maybe 250. It's almost doubled, and that didn't happen overnight. That was like 14, 15 years, but that property produced an income, and it still does every single month. In fact, it was previously a HMO, split now into a 1-bedroom house and a 4-bedroom house, which is both let out. So there's an example of it was income driven first, and then later on down the line, that equity was built in. So think of it like this. If you're trying to get to a place where you want some level of security, and again, don't pursue this as a get rich quick scheme. But think of it that each time you buy a property, it's adding an extra £1, £10, £50, £100, £1,000 a month to your passive income over there. You might be working over here, and this is slowly building up and slowly building up. I had that conversation with somebody this morning, interesting enough, another parent that invests in London, and he was saying that he's interested in diversifying his portfolio out of London to buy where his money will buy him more income. Again, that's one of the things I teach on my 3-day trainings is like, okay, this is a southern property, this is a northern property, look at the difference, what are you looking for at the moment? And that comes to the last question, which is the best strategy in the UK right now. That's down to you. If you said, well, actually, I have a big business already, it's an online business I've been building for the last 20 years, 15, 30 years, whatever, and well, it will be 30 years probably if it's an online business, you've gone online, and actually you don't really need passive income, but what you don't have is any assets. So you want to put some of your wealth into some assets that have long-term capital growth and at least support themselves and are cash flow neutral. Okay, well, that's slightly different situation now. What we're looking at is somebody that has already a passive security, but they don't have any assets, and they want to have those assets left for the kids in the future. Right, so that may be a strategy where you're buying those properties more to hold them for capital growth. Whereas somebody else is saying, well, actually, no, I don't have any income at all, or I don't have any passive income at all. I have a salary. What I want to do is buy properties that will ultimately each one stack up and add another 1,000, 2,000, 3,000, whatever it is, to my passive income. And yes, it would be nice to have that long-term wealth in the future. In other words, the portfolio you bought in total for 2 million, eventually it's going to be worth 3 or 4 million. So it's doubled. It's got £1 million to £2 million worth of equity in there, which you can sell. And then of course you've got taxes to consider, which is why the tax planning comes into play at an early stage, not at a late stage. Okay, so what's my point? My point is answering that question is not as easy as it sounds. If you said to me, what am I finding is working at the moment, then that's a different question. For me personally, what we're finding is that HMOs with guaranteed rents work very well, typically social housing, government schemes, asylum seekers, that type of thing, because there's so much demand for that. There's also an interesting growth in a couple of the towns where we've bought, where there seems to be an inundation of students wanting to get let. Now, I think they're all excited to get back and they wanted to secure their properties. So that seems to work very well as well. Commercial units split with resi above and commercial underneath gives you some flexibility, potentially to convert the whole thing to residential, or you might feel that this is a company that is going to be strong even through the next recession. That's the one thing to consider is making sure that if you've got something going on downstairs that is a commercial unit, then people are saying to me, surely that's a good opportunity, right? Yes, it is if companies are going bust, but because you can help them out. But then do you want to keep that as a commercial, or do you want to switch that now to maybe one bedroom flats where people seem to be wanting to go for affordable housing as well? So those sorts of strategies work as well. And again, if you want to get in before, unless they slide the date, March of next year, £500,000 worth of stamp duty wiped off. So if anything up to £500,000, there's no stamp duty being charged. So one strategy has been to buy, renovate and sell properties back out to the public. And that seems to work very well. I mean, I've got a friend of mine who's just done it recently in the south here, and he had 3 or 4 deals going on at the same time. And he actually ended up getting a higher price than he expected for those properties, primarily because people are saying, well, I have to pay the stamp duty, so I don't mind getting this property a little bit more expensive because the amount they're putting down is proportionally less because they're on a mortgage versus the stamp duty they would have had to pay. So it makes sense for them to do it that way. They can afford to pay a bit more for the house. So if that slides back beyond March next year, it might be worth looking at that. To get a property now, renovate it and sell it before the end of March next year, it might be possible, but you're going to be pushing it, I think, with the winter months and COVID, etc. Good. So that's my answer, really. Yes, I think it's a great time to get into real estate. I don't think you should be too worried. COVID has had an impact in certain areas. I think it's going to flatten the prices for properties. But as a long-term property investor, we're focused primarily on cash flow and long-term capital growth. There are also areas that have become very busy as a result of COVID. We were approached just recently on one of our properties by a local council offering more than we were getting as the property as a standard HMO because they wanted to place people for social housing. So there's a shift. If you go and look at the government websites, you'll see this as well. So that's the thing to be mindful of now, is what would be the markets that seem to be growing. Of course, when people can't work, they can't buy properties. So that means they're going to more likely want to rent properties. So I think we're going to see the same thing as happened in 2008, 2009, 2010, which is an increase in the demand for rental properties until such time, possibly 2-3 years from now, the market starts to increase again, and then there'll be more of an interest in a demand for buying. So that leads to another strategy called lease options, which is where you have the right to buy a property in the future. So that's a strategy that's working at the moment. The right, I just taught a student I spoke to on the phone this morning who literally has a friend moving overseas and he's setting up an option agreement with them. So these sort of strategies work. So there are opportunities. You just have to be selective and learn to do it properly. And I think choose who you want to learn to do it properly as well. Some people put other people down, other people are just enlightening, and you've got to choose to be one of those two types. Who you want to be with. Do you want to be with people that are inspiring and are giving you good quality information versus those that are maybe just using sort of contrarian marketing to put others down as well? And I don't think that's the way to go forward. So if you're choosing to get yourself and to learn, diversify your learning, broaden your strategies, your finance and your learning. That's the key thing. You've really got to have multiple strategies up your sleeve. Don't just go learn buy to let, because buy to let is one strategy. Equally, don't just go and learn social housing, because social housing is just one strategy. So look to see if you can learn several strategies to allow you to adapt around different market conditions. And again, that helps you grow into the future as we start to see other areas of the country move into different strategies, but as well as other opportunities come to us as property investors. Okay, hopefully that answered the question. That's a bit longer than I planned. I shall see you on my next post.